Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. Maybe the resolution is much better. Janos jumped in and tweaked it for me, so it looks like things are moving pretty positive this morning. We're going to check it out and see in a few seconds. I'm going over to my chat line to see what's going on there. Let's take a peek. I'm sure you can see it there. I see one nice big screen. I like that. That's good. Instead of two split screens all the time. Let's go to the webinar there. And let me think, what else we got going on here? There we go. Oh yeah, I think it looks better. I can't tell exactly, but it definitely looks better. Let's see. Oh, good. Is that Nibe? Nope, let me just answer this real quick. Hey, Joe. I am on a webinar at the moment. That's why I wanted you to ring a few minutes ago. But that's all right. It'll be over in 57 minutes. But if you want to head this way, I'll text over my address. Joe? Hello? Okay, anyway. There we go. We can see the. I guess we can say we can see the Swiss there this morning, moving up. Let's see where are we at. So let's see. There we go, and you can see that we have more green bars as usual, and it's just been, just pushing slowly, steadily up. And you can see the same things going on our Chicago quant over here on the right, so it's confirming it nicely. Lots of green beyond the range. The range has definitely gotten flipped out for the time being here. And you can see, we've been still marching north. And you notice the volume keeps on dropping. So the combination of both of that, I guess... I don't know how to interpret it any other way, but oh, here we go. Hey, Janos, the mono sound for setting I hear only left ear. Clear. Robin says it's clear now. That's cool. So the mono sound. Where would I go to change the mono sound? Do I go into file and then something else or something like that, or what? We'll see what he says. And we'll go from there. And, but at least we're clearer. That's a good thing, All right, just waiting to see if he wants me to change the mono sound there. All right, well, we'll just keep on rolling along until we figure that out. Don't waste the viewers' times. That's the Janos. That's the Janos I know. That's it. Clean and clear, Captain. I like that. All right. Let's see. All right, so let's just keep on marching. I like that idea. And, you can see the best I can figure, when it comes to a story to try to understand why we keep on seeing the dollar firm, I guess it's because we are the flight to safety. That's the only way I can figure it. It does seem logical to me in some aspect, because every time I try to say to myself, remember, I do my webinar as if I'm living outside the United States, not in the United States. So in other words, we look at the currencies not the way Americans look at the currencies. We look at the currencies the way the world looks at currencies. In other words, the dollar, yen, the dollar, in the United States, we go the other way. We look at the yen dollar. So, it's like 90. Well, now it's up at the 123, so it would be like 79. And the same thing with like Canadian. We look at Canadian and we go, oh, it's 70 something to the dollar. We'd look at it that way. And same thing with the Swiss. Whereas a lot of people look it's the Swiss would be, you take the 10, like right now Swiss is trading at 93. So basically in the United States we look at it as like 1.6 or something like that. And so I do the same thing with finance. I think of the marketplace and I go, okay, if I was living in England or if I was living in Japan or even in China, or where would I put my money if I wanted to invest in, X products, And obviously as a derivatives trader, I have a different opinion about it more than most, because I'm always trying to marry options with the underlying product. So to me, my risk factor is very low, but most people, they go naked long forever or naked short forever in a particular product, and the next thing you know is that it's rocketing itself all over the place. And when it's rocketing itself over the place, then what happens is that basically it really let me think. Just got an interesting one there. Okay, so in the end result, the dollar going up means that they're running away from their own currencies. And why would they do that? They're buying something in dollars, right? They're storing their capital, and that's because our interest rates are rising. And most of the world, interest rates have not exactly been a good return. Now, I guess you could say, yes, but you got this inflation. And it's like, whoa, wait a second. I guess you have to subtract inflation from zero return and growth. And when you look at it that way, it's definitely an Alice in Wonderland situation. There's no doubt about that, for those that understand what I'm talking about. And so that's the only way we can look at it at this point, at least in my head, There we go. So, what are we doing for here? Let's go over to. We were gonna discuss today how to read the charts again. Giannis was saying that we should have a webinar that says how to read the charts, and so that's what we're going to do. Is we're going to discuss that as we go through all these other things, throughout the webinar here. We're going to investigate, I guess you could say. We're going to investigate. So when we jump over to, let's see, where is it at? Right there. When we're looking at, we see like here the Swiss. You can see our green dots. That tells us obviously there's buying power. When we see a red and a green dot, it's about 65-70% of the time it'll tell us that there's some real action coming. Some type of, it's a corner. It's a turning of the corner of a market. Like in this case here, when you had the red and the green, next thing you know, it was falling down. It tried to pop up, failed, went into a sell the next day, and went down. Now here you get it, the same thing, red and green. It goes up the next day, green dot, and it tries to lift up. Sometimes it lasts for days. Sometimes it lasts for weeks. Sometimes it lasts for 1 day or not at all. And so you can see on this corner, there's a corner again. It's at a bottom. A lot of times it will emphasize it. It's not like it's 50% of the time. It's greater than that. So in this case here, you can see we got the red dot right there and a green dot. You got a green dot. It exploded up the next day. It's a corner of some form, but it didn't last long. And then it just, a couple days of buys was, plus, but not making any good dough. Goes into a daily sell without a signal of a red and green, which is not that important. And, because what we really do is we watch these here, the daily signal and the weekly signal. And we put the three all together as a combination. And so in the case here, we'll start off at the last moment. We're in a daily buy from there because it went through the zero line. And on J4X, what we call it, is the golden or yellowish dashed lines, the white line piercing it, and you see the strength. Up at the top, we're using Hinky ASCII bars, emulating our what's the best way to describe that? Emulating our dots. It has a correlation of about 65, 70. It's like 68, almost 69%. So, it's a good thing. It's a really good thing there, and we're very happy that we can do that. That we can correlate a public indicator to have an accuracy rate close to 70% to my math. That's how far ahead my math is to anything I've ever seen. So, and believe me, anybody out there watching this, if you can find something that is deeply, accurate, or just as accurate as mine or more accurate, please tell us. Because believe me, you'll notice that we do that sometimes. We throw things up on my own chart. People say, okay, let's go to cable, and I'll give you a good example of cable. Let's go to cable, because there we have John Bollinger's one standard deviation Bollinger Bands, and when I didn't even say, I saw Janos changed my profile, but I don't think I remember telling you I used to be on I used to do a interview with John Bollinger every 2 weeks. He would call me and we would talk live on TV, and see, not there. And then I would. It was called the Guru Review, and this was back in the 1980s. And John would interview me, and we'd talk about the markets. So that's just a fun thing. So when we go to cable, as you can see here, we have the Bollinger Bands on our chart right there. See that there? And then what we did is we took this is our math, and I made them the same color. That's our time manifolds, the nonlinear time manifold that we use, that I've invented. Let's see if we can raise this up a little bit like so, just to make it a little bit clearer. And then you have the same things here on the next, you have it here on the weekly. And so you can see, here's a daily with the Bollinger Bands, because someone said, hey, Bollinger Bands are really good. And I said, okay, well, we'll throw them up on a chart, and you can always take a look and see how my work is ahead of it all the time. And you can see here, you see let's see if we can widen this. And let's just make them wider, or let's see, what do we do? We shorten it like that. So you can see here, Bollinger Band tops out right there. And I think we have a white line in here. We do. That emphasizes. There we go. White, it topped out there. But notice my band topped out back here, days ahead of his. And it does that all the time. My bands are in the same trend, but only much days ahead of it all the time when it comes to the Bollinger Band. Notice how the Bollinger Band is banging against the bottom end of the range here of the chart. Well, we went into a cell. Where did we go into a cell? Are we in a cell now or something? No. Yeah, we must be the cell there. Let's move this. So here, you can see we were in a cell there. Bollinger Band, right? It bounces off of it. You're supposed to, if it breaks the center line there. See, we even have the center line in the Bollinger Band. Then it's a buy. Notice it goes back up and challenges it. But on our work, we're just gliding down. And let's widen this out, too, at the same time. Where we are. Wide. There we are, like that. So you can see our math is always ahead of the Bollinger Band. It's ahead of everybody's math. No one's math is even remotely close. The best I've ever found is about a 70-some-odd% correlation. I smooth stuff out. In other words, I'm smoothing my work out with a standard deviation. I'm just doing it against my formula, whereas John is using just the one standard deviation of the price of the value of the product itself. Same thing here. We didn't change the colors on it, but that's the time manifold there, and what we see there is that's the weekly signal, and you can see here. Let's see, it's been in the cell for a while. Let's just move it over, keep it fat like that so you can see it. So we've been in a weekly a weekly cell since back in here. You can see the time manifold got pierced, the pressure put it into a cell. You can see John's daily. We don't have a weekly of it. Matter of fact, I probably should try to throw a weekly in there sometime just to show the competitiveness of both. And you'll be able to see that at the same time. But that's the way to read it. Multi-chart screen shown from other machine through any desk is too small clearly to be observed. Hard to see if stuff. Okay, so let's do this real quick. Like that. So I gotta find a way of pumping that up too in size. Yeah, I saw you redid my profile about the years of experience. You could say that I used to do the Guru Review with John Bollinger. He would interview me twice a month. I think I've told the story where at one point he tries to connect me up to the head of Merrill Lynch's technical analysis. And I get up to World Trade Center 6. I'm thinking to myself, why do I want to go up there and talk to this guy? But he was having problems at Merrill Lynch. He was having problems he was having problems with candlesticks. He was it's at Nissan. Nissan was head of Merrill Lynch for technical analysis for a long time. And he ran the technical analysis out of Japan and then became head of all of Merrill Lynch, global, and so he was moved to New York. And he was at World Trade Center 6, which was the Merrill Lynch world headquarters. And John says, Nissan's having problems. I think you're the only guy that can help them. I said, all right. So I go up there and I talked to him, but I remember asking myself, I must be crazy. You talked to Bollinger on Twitter? Tell him you talked to me. From the Guru Review. That was the show. That was the name of the show. The Guru Review. Say, we have a technician that does webinars, and he says that he used to be on the Guru Review with you back in the 80s. Or was it the 90s? I think it was, I'm not sure. It might have been like 91, 92, something like that. That's where I think it was. Anyhow, there's a good example. Now you can see, I've made it larger, and you can see it on the screen there. And you can see how, our work, where's that white line again? So you have here, Bollinger Band starting to curve. You see our work already curved and broke down. Matter of fact, we were in a daily sell right here. This Bollinger Band was still expanding up in value. Ours was moving down from this point right here. We were moving down, went into the sell. It did a little bounce. You can see the bounce right there on the price action itself. His was still rising, and his math was underneath. And you can see here, in this case here, at least the red line was doing the right job. It was through. So in essence, I guess you could say he went from there, and then you could see the red line, and it was just riding down. And then our work, when you get this bounce, his is still sliding. See how his line is sliding there? Our work turned back up. The blue line turned up to join in with his, and you can see that this is so much more sensitive right here compared to the Bollinger Band. You can see the weaknesses breaks in. It makes a new low here. You can see that action right there. And so that's what the nonlinear time manifold is doing. Hey George, how you doing? Can you see the quants better now? Doc, thanks. Can see the quant. Okay, good. And what we're going to do is we'll jump back and forth until I can figure out how to make it even bigger on the whole thing. So, let's see. So, what else can we say about that? I guess in the end result is that if anybody sees an indicator that they think could be good, put it up on the chat line. We'll put it up on the screen and compete it and make it compete. That's what we always say. We used to call this at one time with Geta and before Geta, I forget what her name was, but Geta was when I started doing the webinars and then with Polina and all like that and with Kay, I used to call this Algo Wars. algorithms battling against each other. And that was the whole idea, is to put my technical analysis up here and watch it compete with the rest of the world. That was the whole objective to begin with. I thought that, see, on a trading floor, you had this opportunity to exchange ideas and concepts. But, when now we are proactive and, you don't have the opportunity to exchange ideas, then what happens is that you're kind of lost. You don't have the opportunity. And so I thought, wow, this webinar would be a real two-way communications between me and many technicians around the world to have conversation about different things, So that's where I'm at. All right. So that's how we use the nonlinear time manifold. Now let's just take a look at cable. We'll shrink it down a little bit so you can see it over here on J4X at the same time. You see all the red. You see the white line piercing here to the dashed line. And then at the same time, we have that same action going on. I don't know if I can go like this with that too, like that. There we go. I can do it like that. There we are. And at the same time, we have it going on here too. It's happening. Let's see, right there. You can see that. We go into the cell here. You see that? You see over here. Let me do this. Let's move that chart or whatever it is. Like that. There we are. And open the drawer more so I can. And then you can see right here, it's the red dots. In this case here, it's the red hinkies. You see the white line is pierced underneath. This is the best indicator you're going to come across with out of the public arena. And now we've been experimenting with this volume product. This is the what's it called? It's called the, I think it's Kelly from our webinars. The trader Kelly came up with this, Ask Bid Volume. And we watch this and see how this goes. And you notice with it moving down, when the volume's moving down, the product likes to go down in value. And so that's pretty much our game plan here, really. And we've kind of drifted over the years. We've gotten, deeper and deeper into conversations and looked at different concepts and so forth. But and now we're on YouTube compared to the in-house at Swiss Bank Dukascopy or Dukascopy Swiss Bank. So it's a different game now. But that was the objective. The objective was to do webinar, put my math up there, and then see if someone could find something better. Because without exchange floors, with people exchanging ideas, and we're all reactive. We're not in a reactive world anymore. We're in a proactive world. And being stuck in a proactive world means we need to find new ways. I think I used to refer to this also as the electronic trading pit. And that was another objective, is to make this like a trading pit. And, and go from there, really. I mean, that was really the process in my head. Just happy to talk concepts and ideas. It is just my nature as a trader to want to have conversation, and and that is the name of the game, really. And the end result, you won't grow in trading if you're not honest to look at the trading itself. Now let's just take a quick look here, but notice how far they have drifted. Where's that mouse at? Look how far we're coming down and challenging these lows here. I hope that doesn't mean something whack is happening, in the war. Matter of fact, what I'm thinking is, let's see if I can move this like that. There we are, like that. There we are. Yeah, I hope that doesn't mean something bad is happening. And matter of fact, if I go like that, I guess that's better, isn't it? There it is. And you can see it's a little tighter, but let's go check out oil, because I think oil is just up a little bit today. I'm going to just run over to the oil complex for a moment and the gold complex, just to make sure we're not, in the middle of this conversation, we're seeing the dollar strong. Let's see if gold is strong, there's a problem. If gold is not strong and oil is not strong, then it just means that they're running towards the dollar because they're becoming more and more convinced we're going to raise our rates and we're going to be a better return, which is definitely strange in its own right, but it is what it is. Now, you can see here oil is up. It's been like that all morning. It hasn't really popped any harder, so we're not exactly seeing anything particular there. And let's just take a look at gold real quick. Gold the same way. Gold is basically unchanged to minus a little bit. So there's nothing bad occurring globally at the moment. So let's go back to the currencies. And that's where we are, traders. This is what we do. And so this particular webinar is aimed at that. But we can look at any product anybody wants to see, and we'll go through all our products. And we'll talk about the different characteristics of understanding our charts. So from there we go to the euro and see what the euro is doing. Same thing. It's falling down. Notice the white line is trying to bottom out, but then look how low it is. This goes from 100 to 0, and it's rare for us to see it down that low. Look at that. I mean, it's been a while since we were down that low. What was that? That was back in November. November? Are we in, what are we, 223? I guess we are in 220. No, we're in 222. So, November, December, so 221, I guess. That's what it is. Back in November of 21. I was confused what year it is. And so, in the end result is that they're really putting, and that was at the bottom of something too, wasn't it? It was off the bottom of this big sell-off where it made that much of a low. As a matter of fact, it still made it even a lower low. So it's going to be something we should be watching. We may be coming into a low. Maybe we're seeing the end of the, I don't know. I would hope when Ukraine gets cleaned up, we're going to see a lot better things. Let's see. Is that my name in English? Cool. I like that. That's neat. Cool. Thank you, Robin. I think that's classic. I like that. I wonder who did that. Oh, George did. Neat. I'll have to ask Polina to do that someday. So, that is that. Now we see the euro. Let's put the euro up there on the Chicago side of it also. You can see it's coming down to the bottom end of the range. And Kelly was wanted to short that thing naked right here. I was like, be careful. Buy a call and short it. So I'm making less than Kelly would be making. That's what it comes down to. But that's the name of my game. The idea is to make money. And so that's the answer to it all in the end. And you can see here it's it's broken the time manifold, and now it's trying to bounce back up again. It's hitting the bottom end of the range right there. And let's see if I can I move that down? No, I guess not. So what I got to do is I got to go like this. And then over on J4X, you can see that same thing. It's down at the bottom end of the range. So we'll see what kind of bounce we get out of it. Oop, didn't mean to do that. Let's do that again there. And so we'll see what kind of bounce. We're getting some type of bounce it's trying to do. But at the same time, we're in weekly sells, and we've been in a weekly sell since, like, what is that? Back in February 11th, we've been in a weekly sell from the 114-ish area, something like that, 114.5, right around in there. There was a 114.95 day the day before. It's been pressured. Maybe it was right around up in there. And end result is it's dropped about 700 handles, We're down in the 108s from 115. So it's at least 600 and some odd handles it's dropped. And again, dollar index hit the 100. Did it again? Let's go check it out. Let's see where we go. We go to here. We got the ETF of the dollar index we look at. Now it's broken down in quarters, I think, or something like that, or thirds. Let's see. Where's it at? There it is right there. Yeah, another high. Another high. And you can see we've been in a weekly buy since back in here, back in early February, about a week before the attack by Russia. And you can see here, we went into a daily buy here. Boy, look at that fight it did. It didn't want. They were selling it down. Our math was trying to turn up, but we kept on getting these reds and greens out of it. It's screaming. 2 back-to-back volatility signals. Boy, there's a corner that it turned. It's a pretty big corner, isn't it? And then, yeah, I'm going to throw it up on J4X right now. Right. There it is right there. Look at that. It's just banging away. 99.96. And it's just got, it's the same. It's, it's following exactly with the Chicago Quant. It's got that upwardly thing. Damn it. I didn't mean to do that. Let's go like that again. It's following that whole direction there. You can see here we have the same thing. What's kind of curious is that we had a couple days with no green or any color, but we were above the zero line. And we were flirting at one point. We were flirting down here with the weekly. We were in a weekly sell, or we were getting close to it somewhere along the line, but obviously that's cleaned itself up. I mean, the weekly, I guess you would think money would be thinking, okay, this is the end of the road maybe, something like that. Without leverage, it's up 5%. Whew. That's a big number. That is a big number. I have to credit the interest rate increase. Also, you just cannot believe the change that's coming to America in the next 6 months. Is it 6 months? Where are we at now? We're in April. So April, May, June, July, August, September, and October. In 7 months, going into the election, like November 3rd or something like that, it's going to be the biggest change in our House and Senate, especially the House, since 1861. Can you believe that? It's going to be that big a change since 1861. It's going to be a massive red wave. They're going to turn the Democrat Party into literally. There may not be enough Democrats to have a breakfast. I don't know. They're just going to wipe them out. I wouldn't be surprised if we end up with 120 Democrats. That's it in the House. Seriously, they may lose 50% of their House. 50%. I think that's astonishing. The polls are off the rails. The polls are like even 30 some odd percent of the Democrats don't want to vote for Democrats anymore. Something like over 65% of independents are voting Republican, and the Republicans are voting something like 98% or some crazy number. I mean, the polls are off the rails, and they've been that way. And Biden's poll numbers are at the lowest in history for a president of the United States. And you wouldn't know it listening to our news. So, it's one or the other. The markets are smelling that, or they're smelling the success in something, or the increase in what is it called? In an increase in the interest rates here. It's a combination of all of it. I don't think, I said this in the webinar before, and I'll say it again. I don't think inflation is going to be that hard to tame. It's just that the Fed has to act like at least they're trying. Because once I believe we're going to have a veto-proof House, which means they'll be able to override anything and everything Mr. Biden does. They'll be able to actually, you have to pass something in the House, and then it has to go to the Senate. Then the president has a choice of signing it or not, and then the House has an opportunity to override it, and they don't have the votes to override anything right now because they're almost tied. But I believe we're going to have so much control of the House that the House will function as the presidency. That's how powerful this election is going to be. So that's my idea, and I think it's got to be in the markets because, we've got 10% inflation right now, and the markets are pretty sanguine. They're pretty quiet, when you really think about it. The stocks are falling? Let's see. Last I looked, they were up. Oh, yeah, look at that. They're backing off a little bit. Let's see if we can put this up. Yeah, so they're backing off. So but the S&P 500 is down 3. Yeah, there's the Nasdaq now down 48. The Dow they were all up at one point. The Dow is still up 25 points. They were up about 130, 140. So that's kind of a background noise. This index here, which is on Dukascopy, all of them are. But this one in particular, it's called the Tech 100 or the Nasdaq 100 right there. This is very interest sensitive. This feels the pressure from interest rate increases. It's influenced enormously by that, because those companies have a tendency to need to borrow because their cash flow has to stay at a certain rate. Yeah, it's odd, but notice gold. It's not a calamity because, look at gold. We'll go back to gold real quick, but you can see it there. Gold is not running. They're not taking, gold through the roof. It's still actually down for the day right there. You can see that trading at 1937. Pay money. Yeah, Nasdaq. I'll tell you, that's the companies of the world too. I mean, you're talking about Apple Computer, you're talking about Tesla, you're talking about Microsoft and Intel, you're talking about Amazon, Google, Facebook, Twitter. You're talking about Amgen, some of the biotechs. You're talking about they are the cutting edge of global companies. There it is there again, right there. Or better yet, we can just throw it in there like this, and you can see a short-term chart. It's not filling in yet. Let me see if we can get it to fill in. There we go. So you can see right there. It went into the sell. This is a 1.68 Tesla reference frame. It's a spatial. Went into the cell here, and it has stayed in the cell. Let's see if we can do this. Went into the cell here. Oh, you can't see it. Where is it at? There it is. Okay, so it has to be big, like that. You can see it there. It goes into the cell here, and it doesn't go back into the buy. It's just been going down. And then you can see where it went into the buy here. Now this is what I call it's a 936 contract bar, which is a 1.68 Tesla. A Tesla is 396 twice. Twice? Yeah. So no, actually this is the 1.2, isn't it? This is the 1. This is the 2. Is this the 2.3? This is the 2.23. That's what it is. So I break Tesla down in different ranges. Like, let's see if we can do this again here, like that. So here is a 3. It's supposed to be a 396. It's just a shy of the 396. And this one here is, which one's this? This is a 639. This one's a 1296. That's 5 times, or a 50 percentile. And then here's another 936 right there on these are the S&Ps, these two, and this is an S&P. I trade the S&P more. And so let's get this back up there. So you can see here, this is the daily. Let's put the daily back up on here. There's the daily. You can see it's been in the sell since here anyway. The weekly keeps on trying to break down, but they're not doing that good a job at it at the moment. Went into the buy back in here around 14 and change, and it's been holding up very strongly. So the objective here is to just constantly try to, show us, the technical analysis we use, and then we try to, at the same time, allow other people to bring in other technical analysis, and we try to see how good or how it can help, if it can help us in any form. And that's the objective. The idea here is to make money. The idea is not to trade, is to make money. And so the best way to do that is share ideas, look at concepts, see what you can do, and go from there. All right, let's jump back up to the currencies, and we'll just check out and see what else is going on over there. It sounds like everything is spinning around. So we saw the euro. Let's just take a quick look at the euro again and see if it's sitting where we left it. Yeah, it seems it hasn't really shifted that much in the last 10, 15 minutes. It's still hanging out down towards the lows. This thing's trying to pop up. We'll see. Now let's jump over to the Turkish lira. We'll go with the euro Turkish lira this morning right there. And you can see it stayed inside its, let's tighten that up just a little bit, like so. There we are. It's staying inside this big rectangle that we've put up since the announcement that the government is now giving free put options to investors who buy the currency. And there it is right there. You can see all that red on the J4X. Same thing as we have on Chicago Quant over here. Can you see that? But yeah, you can. And then you can see here, the white line was pierced and it's breaking down, and you can see the volume keeps on finding ways to make new lows. And so that's the dollar, I guess, is being king dollar again as usual. We would hope it would stop that. It gives us buying power, I guess. We can buy more foreign goods cheaper, but we'd rather be buying domestic stuff. When the dollar goes down, we buy more domestic stuff, which is kind of cool. Increasing jobs. Classic fundamentals we talked about yesterday. Now let's jump over to Canadian. Right there. There's the Canadian. You can see the last couple of days we've been in a buy right there. And let's check it out over here on J4X. Right there. You can see that line here has been, spiraling up, just screaming since over in here, saying it wanted to come back there. Now we're back to that range. And you can see the volume has been kind of bouncing around, it's showing us that there was more buying coming in. Then it would break down again and made a low here, took out that low. And now we've been lifting. It started to lift up with that up until about 2 days ago, and then it broke down again. But you can see here the price of it is still going up. And we've had 3 green dots, maybe 4, I don't know, let's see. Let's just see if we can tighten that up. See, move it out of the way. And let's see, where is it at? Scale, let's see, up. So it'd be scaling. Right there, like that. Yeah, there it is. Scaling. Screen. There we are. And fix that. There we are. There we go. So you can see there, it's done the same thing. And so you can see here, it's trying to pierce up. We've had, there was a red there with that low, and 3 days of the green, and there's been a bunch of them here. There's the volatility one right there, red and green. But it didn't do us any real favors. Tried to lift up, but in the end result is that even went into a buy and failed the next day and made that crazy low the following day. Sometimes it like I said, it can affect it over a couple day period when you get a red and a green. It can have an effect for like 2 or 3, 4 days, and sometimes it'll just carry on for a while. In this case, like right here, can you see that? No, I don't think you can. So let's just do this real quick. You see, there was one right there, a red and a green, and you got this type of action. It's not a real, I don't have a rule written about it. All I can say is that when I see a red and a green, I expect it to be noisy. There's action coming. And then I watch, the real stuff. The gas line 3, this one right here, the center for the daily. and I start watching and I look where the weekly is. In this case here, when we got that red and green, where was it? Right here. A day later, we went into a buy, and then it popped up. But at the same time, we went into the weekly sell that week, and so I wasn't a big fan of being wasn't a big fan of being long. In other words, I just wanted to be flat. When they're competing with each other, the weekly and the daily, I like to be neutral or hedged, one or the other. In other words, have an option or a binary hedging my long or short, that type of thing. Let's see. So that's the Canadian, and you can see here it's been really just washing around. And normally, Canadian goes up. That usually means that oil is going down. So we're seeing the pressure on the oil complex through that. At the same time, it will represent a lot of times that gold is doing the same thing. It's going down in value, not up. So that is really the name of the game here, is just constantly searching for the best. Just constantly over and over and over searching for the best. And that's what we do. We look for the best, and we try to just constantly look in that direction over and over and over again. And that is the only way it works in the end, to learn about trading, learn new techniques, understand the marketplace. Takes conversations. I'm not going to be right all the time, and you're not going to be wrong all the time. Okay? And the more we have conversations about it, as I always say, there are no dumb questions in trading and money. There are only long answers or short answers. And that's the way it really rolls. So, let's see, what else do we got going on there? And I guess that's the name of the game there. Let's jump over to, since we've done that, we go and look at, as I said, gold and silver. And we've seen there is the oil. And notice it's falling back even. It's moving back towards the center of the day now. And at the same time, we see the gold basically just plus by, was it 37 and change, I think? Now it's at 39. It's up about, let's see, where did it settle yesterday? They're showing a settlement of 37.80, and right now it's trading at 39.30, 39.40. So we're seeing that pressure. We don't see this going on, but we do notice over here on silver. Silver was through it all morning long. Tried to get through it yesterday, but failed. Got a red and a green, and now it's minus. This morning, it was up into the 280s. So it's the movement is unique in many different ways. So what else do we got going on there? Let's see. Now let's, from there, because of the way the metals were moving and gold was generally moving, let's take a look at the South African rand right there. So right there it is. Notice it's kind of went into a sell there, back into the buy yesterday. Now it's basically unchanged. Let's see, where is it at here? There's the line. Is it there? No, there. So we went back into the buy the next day. They should be down here, actually. They're in the wrong spot, so let's fix them. That's a sell. And then this is the buy. Right there, right next to it the next day. There we are. And they've had a really good run when you really think about it. A very good run. Let's see if we can wind that like so. And let's see what it looks like on J4X right there. And you see here it's up at the very, not the very top, but it's been green for 6 days now. For us, we've been green 2, Nothing on that day, the third day, and another 3 with a volatility signal at the same time. Sometimes it has some effect, and sometimes it does not. More on average, it has an effect. Like I said, it's in the 65 percentile. Like you can see here, a couple of days later, it's all broken down, and we get into a sell. That even warns us. And again, we have here, we get into a sell here, and it's in a sell still. We get another volatility signal, and we're in a sell, and we're in a weekly sell. We think, oh wow, that's a real comfortable trade to take, and of course it is. Then you come down in here, we're in a weekly sell still, but we're not in a buy. So you're wondering if the pressure is going to be from the downside again, and it tries. It makes new lows, but bounces back up, and then we get into the buy here. But the weekly's still in a sell here because it's through the. Let's put the 0 line in there for you. There's the 0 line. So we go like that, and we go like that, and you can see here that pressure is constantly on it from that little volatility signal, and it has shifted the direction. Tried to straighten out a little bit, I guess you could say, with the weekly. It tried to join in on the weekly yesterday. Wednesday afternoon, Thursdays, that's another thing we used to talk about here, and we haven't talked about that in a long time. A lot of times with a weekly, it can try to shift direction, and come in Wednesday afternoon, Thursday, it will kind of try to change. It'll try to adhere to the weekly all of a sudden out of nowhere. It's really weird. It happens on Wednesday afternoons in currencies and Thursdays in stocks and commodities. I don't get it, but it does. And when I was young, I always found that volatility shifts came in currencies. Derivative volatility shifts came in currencies about a day to day and a half ahead of the commodities and the stocks in the United States. So there's something there. I don't know if it's settling up of the week. I don't know if it's a mechanical thing. I don't know what. Dollar cost averaging by funds, whatever. But it does that. It has a natural tendency to go that way. All right. From there, let's jump over to, let's see. The currency that will not be named. Okay, look at that. It's broken the 80 area. And we are now fighting to be in a sell. We've been in the weekly sell since here. Now that they have linked, the currency that will not be named has linked their currency to gold and oil. So that is going to make it a little bit firmer because it's delivering in those things. And hey, that's one way to sell the product, Let's check it out over here. We go to the yen. There it is right there, the yen. And there's the yen. And you can see here all that strength. We're at 6-year highs now on this product. Looking the same way here on Chicago Quant, just as it is on J4X. And you can see we also had a volatility signal right there and went into a buy and in a weekly buy. And sure enough, it's winner, winner, chicken dinner. Same thing, where was it? Here. There's the volatility. And then we went to a buy and a sell. We were in a weekly sell. And it tried to fail and go down. And then we did not have another volatility signal. We've had none except for right there. Sometimes it happens and sometimes it doesn't. Like right there was one in a sell. It was in a daily sell and it went down. A lot of times when the three of them coordinate together, the percentage of successes can really jump up into the 90s, which is nice. We're normally 8.5 out of 10, but it can actually get even better. Our math can get even more accurate when looking at all the nuanced characteristics. Matter of fact, if you add the blue dashed line in here on the weekly, that can also be very influential, as long as it's above the time manifold here. And when it jumps across, and they're all together, it can be a rampage, like right there. We had the green line and the blue dashed line. That's a super. This is the super indicator. So it's gas line 3 with all 5 plots of a gas line 3. And the 6th plot is a gas line 5 plot 1. I know that sounds a little complicated, but that's what that is. And so it's a 5 average versus a 3 average of our mathematics. So that can be very enhancing. You decide to take a position up when it does that, and you have something like a 96 percentile of winning. That's pretty damn good, You get up into the 90s. It's good enough now when we ride around in the 80s, the high 80s, but to go into the mid 90s, that's the whole idea here, traders. Not to trade, just to make money. Alrighty, let's jump over to. Let's see what else is there to say. Where are we at now? Oh, we're at the end of this game, aren't we? All right, so the objective today was to try to show some of the characteristics of what we're looking at, how to read these charts. And I think that's what we're going to basically label this webinar today, is how to read Doc's webinar, the charts on the webinar. That seems to make a lot of sense, because it's important to, sometimes we all take it for granted, and we have a change in, ideas and so forth over time. But when we really reach back to talk about the charts and how they work, then what happens is that some of the old ideas jump out, like algo wars. We used to start the webinar off every day calling it algo wars, algorithm wars, indices against indices, battling it out. I used to say that. I think it was like Geta would go, does it have to sound so warlike? I remember that. That's what stopped me from doing it. Polina said the same thing. I was like, oh, okay, yeah, I should chill out and not say that. But that's what it really is. It's a competition. We want to see the best work. We're going to try to present the best work. We're going to take the best public data that's out there, like on J4X, and show you a good way of using it so that it will actually give you an opportunity to win. It correlates to my work like 68 to 71% of the time. It bounces back and forth. Oh, yeah. Interesting what Wilco's up to. I know. We talk, Wilco and I. We chat. He's been involved in I keep on telling him he's got to come back and do the webinars on the cryptos. He's still deeply involved in the crypto universe. Yeah, him and I go back. I send him charts with this. Here, I'll show you this. We do two cryptos here. We do Coinbase. Where's it at? Where's that mouse at? Let's put it up on J4X first. There it is right there. There's Bitcoin. And then we do Bitcoin over here. Matter of fact, I posted it on my LinkedIn today. And there's the Bitcoin. Bitcoin went into a sell right there on the daily. But it's been in a weekly buy since the 37,000 area. And it's holding up. You can see the green is right there. It's trying to roll over. And notice you have all this red on J4X, and you can see how it's broken down there and broken down there, and notice the volume is dropping. At the same time, we have over here on Chicago Quant, we went into the daily sell there, where went into the buy there, and so it's Wilco is doing a good job. He really is. He's doing he's been, as Yano says, he's been involved in the cryptos since the very beginning. Yeah, I know, but things have changed. I keep on telling them things have changed. Well, he's going to be playing video games and traveling always. That's normal. But he's more involved. I talk to him a lot. I not a lot, but I talk to him every couple of weeks. Every couple of months we go back and forth. We said something to each other and looked at some charts. I guess it was about 3 weeks ago, maybe 2 weeks ago. I do that, and I do Coinbase, the exchange. I do, let me see. Let's close this. There's the stocks. Yeah, look at the NQs are now down 87. The Dow is only up 15, and the S&Ps are down 6.5. So let's do this. Let's go and close that for a minute, like so. And then I'll show you Coinbase. I show them the Coinbase, which is like the #1 exchange, I think, at this point in time. Here it comes. There it is. right there. So it's been in a weekly buy, just like Bitcoin was. You see that there. From this area, the 165 area ran up. I was in a buy with all that, and then it went into a sell and went right back into the buy again. Had another pop up. Then we went into the sell there back in late March, and it's been in a sell ever since. And you can see there's a good example. See how the dashed blue line pierced the manifold and the green line pierced at the same time? And look at that. See, that puts it into the high 90s percentile of success. There's a perfect example. And you know, when I write I'm gonna write stuff for Dukascopy, but I'm only gonna show the best trades, the ones in the 90 percentile. So we'll show the best trades. We'll write about the best trades because everybody can tune in to the. There's no problem tuning into what do you call it? To the webinar and have a conversation with us. Whereas it's the other way around. So so it's when I post an article, it'll be about something that has a 96 percentile a day or two ahead before it makes its move. We'll do it ahead of time. We won't talk about it after the fact. We'll talk about it before it happens. This way traders can take advantage of the math. All right, traders, we're out of here. Happy today is TGIF. Thank goodness it's Friday. So everybody have a safe and smart weekend. And for those over in the Ukraine, keep your heads down. Be careful. We heard what happened in Lviv. Can't believe it. They fired a rocket and killed 30 people and injured 300 on the Poland border. What is up with this Russian thing? Are they out of their minds or what? Anyhow, this is Doc from North America. Have a safe and smart weekend. Happy trails to you until we meet again, which will be TGIM. Thank goodness it'll be Monday. Happy trails to you, to all my trading friends. All right, cowboys and cowgirls, catch you on the flip side.